Hello and welcome everyone to another edition of Money Mondays, part of the District of Columbia's DC Department of Small Local Business Development's District Capitalized program. I'm Camille Nixon, and we're very excited to have a very special Money Mondays. It's not just webinar information today, we're actually launching a new program, Crowdbuilding for Capital, and we're having a quick introduction on the pilot, and then we'll jump into our first webinar. If you have tried to fund your business, I'm not going to share any new information right now. You know, it's a lot of different ways to fund your business. A lot of people tap into their personal finances and get money from their job or from friends and family. But only 3.4% of businesses take advantage of investment financing. And even half of that take advantage of crowdfunded financing. And when we're looking at who are those businesses who are pursuing investment financing, only 2.3% are women-led businesses or BIPOC, Black-owned, Black, Indigenous, people of color founders who are pursuing investment. And those numbers, as you can see, are super low. And that was a concern of DSLBD, the Department of Small Local Business Development. And we began exploring through our innovation and equitable development team ways that we can look at the challenges. Why aren't people taking advantage of investment financing and crowdfunding, and particularly women and people of color, and how can we help with that? So we each year participate in the National Leagues of Cities, City Innovative Entrepreneurship Program to talk with other cities about ways that they're solving this problem. And through that, we had an opportunity to pursue a grant and teamed up with our partners at 20 Degrees, which is a certified business enterprise based here in the district, and their partner, the Marigold Effect, as well as the DC Women's Business Center, to explore what type of pilot we could run that could help both expose people generally to financing options, specifically crowdfunding and investment, and in particular, raise the access of people who are women or BIPOC-owned businesses in the district to be able to explore and access these options with a focus on the WeFunder crowdfunding investment platform. And that's how we got to Crowdbuilding for Capital. This is a multi-week pilot that we kick off today here at this event. It contains webinars. Today is the first of a 4-part series webinar, guides, including self-assessment forms and coaching. Anyone is welcome to attend the webinars, and we're super glad that you're here with us today. For the coaching and the guides, and so our next webinar is coming up on the 19th. Today we're doing the overview of financing. Next we're going to talk about an overview of crowdfunding, and then a general overview of business investment with a focus on equity investment. And finally we'll end, and the date's been posted actually just on Friday, September 29th at 3 p.m. We'll be talking about crowdfunding investments with WeFunder. Now, to access the guides, the self-assessment guide and other tools, as well as the coaching services that'll be offered by our partners, 20 Degrees and the Marigold Effect, you'll need to attend at least 3 of the webinars, and there is a priority access for women and people of color, since that's the audience that we're trying to engage more, since their equitable access to investment crowdfunding is so low. A little bit about me. I'm Camille Nixon again. I'm a project manager and access capital manager for the Department of Small and Local Business Development. We're a DC government agency that supports the development of businesses at all stages, from concept all the way to established and growing and exporting abroad. We do so in quite a few ways in our innovation and equitable development team, the Internet Ed team for which I work. Some of the programs that we have is this program, District Capitalized. We have a great portal called the DC Business Toolkit, which kind of centralizes all that great information, classes and trainings and guides all in one place. And we actually have a crowdfunded loan product that we support through DC Kiva Hub, which we'll feature next week, and a whole bunch of other ways that we can help you. So we hope you'll connect with us online through our meetings in person or by email, ed@dc.gov. I'd like to introduce our partners at 20 Degrees. When we had this idea of trying to explore getting more businesses, in particular people of color, women-owned founders, into equity investment. We were looking around, and it was very easy to find 20 Degrees. They're a CBE, and they've done great work with us in the past and are continuing to do so now. I'd like to introduce Sarah Gibson, the leader of, so she can introduce her team, and we're super excited to be partnering with you. Come on in, Sarah.
We are so happy to be here. Welcome, everyone. We're here to talk about how we get money to places where it hasn't been before for your businesses. So that's what brings us here today. So we hope that's why you're here today. I'm going to turn this over to my amazing colleague, Paola. We'll get to some introductions in a minute. And thank you, Camille, for just all you do day in and day out for all of us who live in the district and call it home. Here we go.
Hi everyone, my name is Paola. I am very excited to be here with you. I operate as 20 Degree Social Finance Specialist and am financing curious. So I'm very excited to be here with you all and just learning alongside of you. So here we go. I'm going to kick it over to our lovely partner, Pooja, to introduce herself.
Hi, everyone. So happy to be here. I'm an entrepreneur, an investor, an attorney, and had the privilege of working with 20 Degrees many times. We're really here to make sure that this program answers your questions and gets you guys to the next hurdle. We know that financing is a huge part of it.
You'll hear a little bit more about the team in a moment. So who are we? You've met us very briefly. So my name is Sarah Gibson. I'm the co-founder and CEO of 20 Degrees, and we've been around for a little over 4 years now. And 20 degrees is the ideal angle to skip a rock on water. Rocks, when they have the right angle, they jump. Some of our favorite, we love to go, we love to skip on Anacostia, and we actually think it's an easier river to get to because it's a little closer. Potomac, and rocks are supposed to sink, but when they have the right angle, they jump. Have been told that it's enough for your organization to kind of sometimes sink, and we don't think that's right. It also means there's a lot of businesses that need more money so that we can jump. That's why we're here. This program that we'll be doing with you really has its roots in the world turning upside down. We had some really strong ideas and had done a lot of work with entrepreneurs across the city, particularly in Ward 7 and 8 before COVID. But what we found is when the world's coming back to whatever this new normal is, the money hasn't changed. And that's not how it could or should be. And so we're here to keep building new ways forward to capital, to revenue. We'll talk about what all that means. And if we do our work correctly for you in this pilot, you are going to leave with more technical knowledge about how the money has been working. We'll say the things that we know people are looking for so you can be ready. So when you do step up to the plate, you have a better chance of succeeding. We've been at this, and we've been alongside our community, and we've built a business ourselves. Pooja's built a few, we've built a couple. And so we're saying this from experience, but also with the lens that some rules have changed and some rules haven't yet. So we're also here as advocates to make sure anything we learn from you can be elevated too. I come to this work with decades of raising money for nonprofits and now being a successful 2-time business owner myself. We've worked with big organizations and small organizations. And I'll tell you that our heart is in our neighbors, which is all of you, and also in the smaller organizations. I also want to give a special thank you to DSLBD, the National League of Cities, WeFunder, the Women's Business Center, Marigold Effect, and all of our partners who are coming together because we just believe the money has to move differently and can when other people have knowledge, when everyone has knowledge that it sometimes has felt like only some people have had so far. So we go from here. So Camille talked about this a bit. Here's how this is going to work. We're going to have a couple workshops, and we hope you really gain the technical knowledge that you've not heard other places here. For some of you, then there will be an opportunity for coaching. How you get that will be a self-assessment, which is coming out next week, and a more formal process, which is also coming out shortly. We'll make it easy, but we want to make sure that that there's only limited coaching slots, and we want to get those pretty honed in. But a lot of this knowledge will be most of the knowledge will be for everyone. There.
Great. So thank you for that lovely introduction, Sarah. Just so that we set the stage for today, our overview of our conversation is really to just learn the ins and outs of financing in order to truly understand what financing means to us and maybe perhaps begin to uncover what kind of financing makes sense for you and your organization. So we'll be talking through revenue versus capital. We'll talk through some prerequisites, and hopefully we'll be able to answer some of your questions just about general financing information. Our goal is to ensure that we are getting as much information out into the communities that are typically gatekept from this community. So or from this information. So if we use some language that you don't know, feel free to feel free to ask all questions in the chat. We're very excited to be here with y'all today. And again, just to reiterate, thank you to our partners. We're very excited to be here today. So I'm going to throw a link in the chat. We asked y'all to answer some questions in Menti at the beginning, and I'm going to switch my screens here to ensure. Feel free to answer this question in Menti. What are some questions that you're holding about financing? We have, is this for startups as well? Sarah, Pooja, any thoughts?
Yeah, absolutely.
For sure.
Not all startups, but some startups.
Yeah, and one thing we're going to be talking about along the way is like, depending on kind of the growth trajectories of your business and what you're actually looking to achieve, what kind of financing options might be best for you.
Basic understanding. Awesome. Also, if you've not heard of Menti before, it's a fun tool. So we've learned about it recently. So we feel like we're a little bit of evangelists around how can you get even more dynamic presentations, and also all the information is done anonymously as well.
Definitely.
All right, basic understanding. Yeah, like what's a block and tackle? What must you know? We'll go over that.
What type
What
of
types of
grants?
and research? Pooja, you want?
Absolutely. Yeah. And what we're always a proponent of is making sure you get all the free money first, anything that you can really obtain. And a lot of times that's more available to you in the earlier stages of your company. So for sure.
Yeah. Process for crowdfunding. Yep. And options. Yep. We'll hit on that. I feel like we're pretty aligned here.
Excellent.
All right. Okay, why don't we go to the next? So don't worry, there'll be another Menti later, so stay tuned.
We're juggling different screens, y'all. Thank you for your patience. Great.
So revenue versus capital. I mean, it's all money, right? Except it's not. So we wanted to make sure that this was an important distinction that we don't think it's talked enough. You can build a business with one or the either or both, but the best choice will depend on what you need the money for. So we want to make sure we are spending some time. And we also just want to put out a disclaimer. This is for educational purposes only. So enjoy that. So 83%. Any idea what this means? It is the number of people who do not get financing or capital. So, and this is nationally. So what this tells us is that financing absolutely happens, but it is something that you build onto your understanding other ways. You saw the statistics from Camille. Part of the reason why a lot of people don't ever get a chance to really have accelerating capital or capital is because they don't qualify or they don't want it. But another reason is because people don't know how to get it. So we are looking to change that statistic, particularly around people who we know, also according to statistics, are building businesses faster than anyone else. And we think when people are in the community, they build community designed companies. Yep, it's just to us. It's not say you can't, so we're going to try and bust that number. So we talk about strings and springs. Strings, or rope in this case, is we think about as revenue. If you just need to stay safe, you need to get the job done, and you kind of know what you're trying to keep down, or you don't do crazy things with rope. And that's how we think about revenue. When you want predictable, when you're just trying to tie down that load, when you're just trying to pull yourself to that next place, that's what revenue does. Capital, perhaps you're better for some of us of a certain age might remember pogo sticks. There's a lot of energy in a spring, and it can be really exciting, but it also can be unpredictable. It also can be a little terrifying. Back to my pogo sticks vision in my head. So that is capital. Capital can take us further. There's a lot of energy in it, but it is riskier, and it does sometimes take us to places that we don't exactly expect.
So basically, we want to really hone in at the beginning. What's the difference between revenue and capital? I often like to think about this, even from a personal finance perspective, is that if I have a paycheck from my employer, that's basically like revenue because I'm exchanging my services with my employer to revenue. For your business, that's really thinking about what are the core operations of your business that you're selling to actually generate revenue. So let's say I own a beauty salon. So I'm, cutting your hair, dyeing it. Those, when you pay me for that, that's revenue. In contrast, capital, that's really kind of the money that you're more structure on the long term, and you kind of think of that living more on your balance sheet. So for a beauty salon, that could be, I have a customer, they're really interested in my business, and they say, you know what, Pooja, I want to invest in your business. And they give me some money, let's say $100,000, and then I give them a portion of my business. That's capital. So I haven't obtained that business from cutting their hair, but rather from them injecting in them. So when we think about revenue, it's kind of like lives on your profit and loss statement, the same way that like in your personal scenario, you get a paycheck and you pay your taxes on it. Whereas the capital would live on your balance sheet. When you take in cash or a loan or something like that, it would be living on the balance sheet side of it. Next slide.
Oh, actually, can we pause for just a minute there about,
Yeah, for sure.
we are going to intentionally use words and we want to normalize them in all communities. And I will say we use Investopedia a lot. If something we say doesn't make sense, or if you come up with other questions, that is always our go-to spot for financial terms. So that way you have the same knowledge as anyone else in the room. Sorry about that. Thanks, Pooja.
No, thank you. Yeah, and please do use the chat if like anything that we say could use some more clarification, because we definitely know that these numbers, these names only become familiar with like constant exposure and usage. Yeah, next slide. So, drop in the chat if you have any ideas of what would be examples of revenue, even for the example of this beauty salon. So one thing about revenue is you can think about it can be really highly diversified. It could be, for a beauty salon example, right? We're cutting hair, that's our sales. But we could also be advertising. Maybe we have like the front window of our brick and mortar business, and we could put some advertising in there. Subscriptions, maybe we could tell people like come for a monthly like cut and color and offer a different price. So we're creating some kind of recurring revenue. We could have some of our money that we put inside of a bank, and then we collect some interest on that. That would also be revenue. So if you could think about it, like some businesses actually take their revenue and they reinvest it into their company. So that's like an example where like when that 83% number comes from is like, not that all those businesses aren't thriving, it's that some of them are saying, okay, I'm just using my own revenue to help me maybe like buy my salon chairs, which going to the whole point of capital. That is kind of like assets that would be using. So in one example, you could use your revenue to purchase an asset such capital. But what's another way we go ahead and create money or financing for a business? And that's outside investors. One example would be, like said, sell shares in your company to one of your customers or some other individual that has showed some excitement and sees potential in your business. Another thing is you could go to a bank or a community development finance institution and get a loan. Like I said before, like investing your own money in the cash, not even from revenues, but let's say a lot of you maybe have started your own business. Now you needed some money to start it. So you maybe earned money from another job, or you've been saving for a long time and you take some of that cash from your own personal and you put it into your bank account in your business. That would be an investment in yourself. Outside capital, and really what a theme we'll be talking about through these webinars is that it's really most possible when you really think about the financial condition of your business. Anything that's attractive to you to make yourself your bottom line good is always going to make an investor look at you and say, hey, I want to invest in that beauty salon. Look at what they're doing over there. So even if like outside money isn't your goal, I think a lot of the things that we're talking about here really are about getting yourself in the most attractive scenario, even for your own profitability. So some examples, I see that contracts, great example, especially that could be like a source of recurring revenue, or it could be that you have some very long-term contracts, and those could be actually considered like an asset. And for sure, tours, yep, ATM products, all that's great. So anything you think about, just like real estate in a salon, it would be like all of your inventory, all of your capital, long-term leases. Next one. So kind of like, why are we like talking about this, the groundwork? And that's really just for us to want to help you think about before you even ask yourself, like, what do you need the money for? It's like answering these questions. I'll turn it over to Sarah for that.
No, that's, yeah. So when a lot of times this is where, especially when we're talking about grants, we want grants in particular to be revenue. We want them to just pay us to exist. But oftentimes grants are capital. It is money, even the free money that comes in to help you grow. So you want to have someone who will buy what you are selling for those short-term needs. Whether it's bills, rent, your own salary, and the ability to expand. That's what you use that day in and day out money for. That's usually not a great place to look for from investors, or that's where you're going to your customers, people who want what you do. And then the long-term needs, this is where we talk about the springs. That's where someone wants in on what your future is. That's where the visions of even grant money is best. When you don't need their money day in and day out to exist, but you really actually do need money to expand, particularly quicker than you might on your own. And that's where that long-term scaling, that's where capital comes in. Pooja, what else would you add there?
Yeah, no, I think that those are all great. I think it's a good example of thinking about, like, if you put yourself kind of in an investor mindset, if you were investing money in a business, would you want to be like, oh, this is like, they're really running out of cash and like, I got to help them with that last dollar. Am I going to get that dollar back? Or it's like, oh, wow, they have this vision. Like they want to like open up a second store, or they want to like take their direct to consumer product and have it like in every Whole Foods in America. I want to support that. So a lot of times it's about like really trying to, and you don't have to dream so big, but it's really about thinking about something more than like, dang, what's going to get me through today?
Absolutely. All right. We have another mentee coming up. Paula?
Yes, we're back on Menti, and I'm gonna swap screens again. So I am going to throw it into the chat. This question we're gonna ask: for what purpose do you think your business needs money? That's the big question that we're trying to answer, and so feel free to click that link in the chat to answer that question.
And you do two things by answering this. One, you help us make sure anytime we're in rooms and people are looking to give money to DC businesses, we can tell them what people are actually looking for. And two, it means we can also keep shaping our content. Okay, marketing. All right, that feels a little bit like revenue. So predictable stuff, website, okay.
Yeah, also marketing.
Might be some pro bono stuff there, you never really find. Purchase land, the land could be capital. Construction and payroll depends, right?
Yeah, absolutely. It's payroll, it's for like your existing hire, but if it's like, oh, I want to bring somebody new on, it could be considered more of a capital thing. Yeah, business expansion, that's like nails it, right? That's capital.
That's capital, no question.
Everybody wants to be about that.
Oh yeah, actually, yeah, the procurement, that feels like that could be capital. It might be because that feels like business expansion to a new market. Oh, newly awarded contract. Yeah, that's.
Yeah, initial hires is an interesting point, right? Like I think that oftentimes like people, it's a good question to ask, like how much are you achieving with kind of like your existing team, if your team is yourself or like just one other person or somebody that's like part-time. But if you're showing already a lot of promising trajectories, an initial hire actually could be considered capital if they see that like you're really going to have some growth because of that. But if it's just really like, oh gosh, I couldn't even make the bare minimum, like executing my product right now without it, then it may feel like more like operations.
Yeah, that to grow and expand my business, cover cost of goods. That feels a little bit more like revenue. You're looking for proof of concept. Often we have to figure out how to sell our first diamond rather than have people give it to us. Yeah. So it seems like there's a mix of things that when a well-run a business that's running itself smoothly and you found your customers, that's a lot of revenue there. But there's certainly some really great capital needs here. So the good news is you're in the right place because we're going to talk about both of those a bit more. Awesome. And tip of the hat to Paola, who's doing a fantastic job flipping between 25 different options here. So
For sure.
Oh my God, your patience, it's appreciated.
I'm in actual awe. So one of the ways we like to talk about and demystify some different types of capital and finance is we look about them as worldviews. So on the left, that's a blue ocean. And those are things that are still hard, but they're possible. It is conceivable that we could go take a boat on a piece of water or in the water. And we know people maybe who've been on a boat and done a long journey. And that's stuff that's friends and family, that's crowdfunding a little bit. That's grants because money has been flowing recently. And that's self-funding. That means taking money out of your revenue and investing it back into your business. The middle piece list, we call that our moonshot. We've all, well, we haven't, but we've been to the moon. Humans have been to the moon. So we know it is possible. Apparently we're going back. And this is stuff that's hard, significantly harder than the ocean, but also still possible. Angel, crowdfunding, we tend to have them on both a bit. Convertible debt, big donors who want to just write you a check. Mission-related and program-related investments, that's from foundations and how they give. Investment funding, bank loans, small business administration loans. These things take work. There's some risk, but they're definitely doable. On the far side is a little bit more of our explorers and other universe ways. This is still possible. I mean, we've seen pictures from outer space that we didn't even know were possible in the last few years. So this doesn't mean that it isn't possible or isn't for you. But what it does mean is we want to be clear about the odds of this working unless you put a lot of effort into specifically looking to secure this type of money. Big bet philanthropy. That's the McKinsey Scotts of the world. Opportunity zone financing, which is something that is happening here in the district, but it's harder. Outcome-based financing, revenue-based financing, and venture capital. That doesn't mean all capital. That means the institutional, if you heard of seed rounds or pre-seed or series A, B, we go on from there. What's interesting though is because the universe stuff is really sexy. So it does get a lot of press, but don't be confused with the amount of ink and how many people are actually getting it. So you can kind of start to think about the two middle, the ocean and then the moonshots, not to take the other off of your radar screen. You can still prepare for them, but just being realistic about your first or second places of investment, not your last. Pooja, would you add anything there?
Yeah, I think just, you want to think about like the type of business that could attract something on the far end, right? It is really looking for the next Airbnb or the next Uber. Because it is such risky capital that they're trying to put in there, they're often looking for a big payoff. And they may even expect that a lot of the other things that they try to bet on fail. So it isn't always capital that's like looking for everybody to succeed. So it may not necessarily be the kind of capital you want, because you may be looking for somebody that's more on the kind of slower, more patient side of things. It's really like, okay, like if you want to grow slowly and sustainably, we're here with you. So one of the things that we'll be talking about in this is like the type of kind of money that you are thinking about.
Yeah, and as Camille said, that there'll be a lot more information on these forthcoming, but what we want to do is just normalize using the terms and give a little more explanation onto it, but you'll hear about them throughout our webinars.
So getting ready for capital, a lot of what we want to do is get you feeling like you're in the driver's seat. This is your company, your business, your idea. And it can feel like sometimes that you're just like, oh gosh, what do investors want? What do I need to do? Like, how do I need to like mold myself to make somebody want to be interested in me? And we're going to talk a little bit about like how to do this from a lens that's more like customer centered and you as a founder centered. Next slide, please. So, I don't know if anybody has any thoughts about the difference kind of relationship between business model and revenue model, but please free to throw it in the chat. But basically, the business model, if you think about it, is really how you're articulating your value. It is your value to your investors, value to your customers. It's not just saying, oh, I'm a beauty salon. It's like saying that, no, I have identified my customers and like really like homed in on like what their characteristics are. Like maybe I don't want to be like Supercuts. Maybe I'm looking to be like the day spa experience for like the busy, busy worker. Maybe I'm looking for I don't want to just be a salon one day. Like one day I want to like make my own shampoos and conditioners and like have an e-commerce store. A lot of this is about thinking about your path to profitability, like where you're going to really deliver the most value to your customer. And so business plan is a lot of different aspects of it. And what we often see people focus on is just a component of the revenue model, which is super important, but we want to help you guys think about it a lot more broadly. But also when you think about your revenue model, it's really important to think in your business, like, 20 Degrees is always talking about like even for nonprofits, like what is earned revenue. Even a nonprofit can think about different ways that they can add to their revenue sources. How can we think about it for your business? This beauty salon, it can say that, like we mentioned, like going into e-commerce, or to have maybe even lessons where like people are like in a pandemic looking to spend less and maybe they want to know how to do their own hair. Always thinking about how you can expand your business, meet your customer needs, and always differentiate yourself from the competitor. Yes, salon into a school. I love that. Next slide.
We'll be giving you a few checklists, but what we found is that people just need to know, like, what does it really take to win on this? And we'll get into more of the specific type for equity crowdfunding next week and the week after. But we wanted to start and give you just a checklist, like, are you ready for capital and this kind of money? So that way you can get there. So the first thing is you got to have some proof that real people that want this real solution, that people want to buy what you're selling, and that you know how to reach them. So also you have to have a budget. People will be asking for financials and a proof of how this is all working. We've got some tools for that as well. Have you talked to someone? Are you really an island? Which I wouldn't recommend. Or do you have a community of people around you who can be there for you as the leader, as the owner? People can help you see things you might not and make it a little less lonely. And also, if you talk to people who've gotten this kind of money, there's something about the straight talk, and we'll certainly give this to you as well if we get to our coaching sessions. But what's it really take? And that's sort of like that's table stakes. That's just the very beginning. But then from there, what's the next thing you need to know? Do you have a pitch deck that really feels polished and thoughtful and answers the questions that investors would expect you to have, whether they be to some degree customers or for revenue or capital? And there's so many great examples of this online that are free, a ton of stuff on YouTube, ton of stuff on the web. So this is something that is out there. Have you talked to a lawyer and an accountant? I sleep better at night knowing them. And there are free programs that are pro bono. And then at some point, when you get big enough, then you do have to spend for it, because not everything should be free. And those are two areas where it does help to professionalize it if you're really going to be raising significant amounts of money. Also, do you have time? Do you have runway? What does that mean? It's not just money. Do you have enough energy? Do you have enough resilience to getting knocked down and getting back up again? Are you ready to do this? And life is hard, so it's more of a duty to warn. I know we're talking to communities who know very fine how to keep going, but we're just naming it here. And so, and the idea is to have as many days of cash on hand as you can. So revenue can come in whenever it does. If you don't get paid 1 month by a customer, they pay you the next month. It's not a problem. And for capital, that if they change their minds or they take an extra 6 months to decide what's happening, that you're okay and that your business can keep growing. So So I want to name some of the things up front that we've seen where people haven't always been told what they need to be able to just get to the starting line.
And I would just add for that first point, I mean, a lot of times we do come across entrepreneurs that are like, oh, I started this business, and you ask them like, why? And it's like, oh, because I wanted to. I'm good at baking. And it's like, okay, well, do you know that other people like your things? Do you know that you have a market for it? And we want to make sure that you really are doing that thinking beforehand to really get yourself to that finish line. And a lot of times the pitch deck, the business plan, I find that a lot of times reducing my thoughts down to paper, it really helps to see where the gaps are in my thinking. And that's why we always encourage people to really like talk to people, write it down, review it. We're here for you to kind of help move that along.
Pooja, I love when you say writing it down. One of the best pieces of advice I got from someone is they say you should be able to draw your business on a piece of paper. And I'll say I've had other ideas, but 20 Degrees was the first business that really drew itself on a piece of paper. So just a blank sheet and a pen, that'll get you started. If you have clarity around that, then you're onto something.
We have a question in the chat that I kind of wanted to throw out to you, Sarah and Pooja.
Yep.
I need a business plan as quickly as possible as the seller wants to close on the sale before the end of the year. Is there a good tool to help me put one together easily? I've never owned a business.
Well, welcome to the world of entrepreneurship, first of all. And two, I'd also put in the chat, we'll find the business model canvas is the one that, and I bet DC had, look at
Yep.
that. Boom. Thank you, Camille. Start there. And don't expect your first version to be your last. I will tell you, I have a whole stack of them. And that's where I would start. Start in the most important piece of that is your value proposition, which is in the center. And it's based on the tech world, but we find it really is applicable to many other businesses. Good luck. That's exciting. Pooja, what else would you add?
Yeah, no, and I think that, Kay, you bring up a good point with like it's a seller. So, my questions back to you and to anybody like thinking about this is, are you acquiring an existing business, or are you, starting your own? And that kind of like really will make you tweak your business plan, because a lot of times if you're acquiring existing business, you're really thinking, okay, seller took the business from A to B, but I see all these opportunities that they've left on the table. So a lot of what your business plan could be is like, oh, they don't use technology. I could introduce like, maybe they don't use, like if this is a restaurant, like they're, all of their takeouts are on a pad of paper. I would bring in a good point of sale system. I would, partner with DoorDash or catering companies or whatever not. So you can think about your value proposition, even in an existing business, about how you would elevate it to the next level.
The other thing I will say is if this is your first business, your personal finances will be scrutinized as well. Maybe not by the exact seller, but by banks if there's anyone else involved. So I'd say do anything you need to do to make sure your credit score is where it needs to be. And you can probably ask around about, and also, Camille, I'm sure you have some even more specifics, but in the beginning, our personal finances and our business finances are one and the same. And so just acknowledging that reality right now. And I saw see Dr. Wise has a suggestion as well. So thank you for that. It's great. So bottom line for this one is we really want to say why you need money is the first critical step. Do you need repeatable dollars that you can just deploy however you need? That's revenue. Do you need expansion money to take you to the next level? That's capital. And really understand, you probably need a mix. So what type of money goes to what kind of purpose is important. And that'll help you not be sad. I was always sad if people said no to me. And it's often because I was trying to put them in the wrong bucket. I wanted them to be revenue, but really they were capital. So the customers, boy, they're happy too when I was able to give them things they didn't want to pay more so I could do more later. They wanted me to solve their problem. Can you draw your business? Can you get a piece of paper out and says who's going to buy your goods and why they're buying it? That's the heart of it. Do you know why you're special? And have some knowledge of who else is doing it so you can talk about how you're different. And do remember that there's so much great press about people raising money and it is exciting and it's cool to read about. But it's an end. Fundraising is not the beginning and the end. It's just an important part of the process, whether you are doing it with revenue or capital. So make sure you don't lose sight of what you're trying to build. Pooja and Paolo, what else would you add?
Yeah, I mean, I would definitely say that, you can always think about the money that you need and that it doesn't all need to come from one source. And, you don't need to think about all of it coming from one investor or one loan, or one customer. Like diversifying both your revenue sources and your capital sources keeps you beholden to no one, or not to everyone to such a degree, I should say. And then for the last point about financing as a tool, I think that we do live in kind of a time where seems like there's a lot of money out there and it's just spreading, and it may not be being spread in an equitable way. And that raising capital from like an outside investor seems like the real win, which it can be. But also, we want to make sure there's still conversation about the real wins of like proving to your customers that they want to keep coming to you and you're getting revenue from there. Because to me, like that's a real sign that the market wants your product or service, that you have active, engaged users. To always think about like what is the true source of like success for your business.
Also, just a tip of the hat to the amazing resources that I will tell you that we benefited from. In fact, one of the first weeks we were in existence at 20 Degrees, we spent time at a DSLBD workshop, and it really helped us. So thank you for all of the great suggestions that are available to all of us that Camille's put in the chat. Pal?
Cool. So our next steps, we have a lot coming for you in the next month. Just bringing the roadmap back to front and center. Today, we talked through just an overview of business financing opportunities or options that you may have. Next week, we'll be talking about crowdfunding 101, and then we'll dive into business investments, specifically equity versus debt, in the same week. And then we'll also touch on crowdfunded investments via WeFunder. I'll toss it over to Sarah.
Actually, I'm going to kick to Pooja for a minute. We had a question in the chat for how much.
Yeah, sure. No, absolutely. Kate raised a question about how much can you rely on a business evaluation versus a seller's evaluation on revenue. I think that one thing that I'm glad, Kay, you brought this up, because there's a lot of talk about like the number of businesses that will be transferring hands as a lot of people are looking to retire and they may not have people in their networks that want to inherit their businesses or buy them. And so they may be exchanging hands with strangers. One tool that we see a lot in that area is seller financing. So we may not cover that so much in this webinar because it's not as applicable to new businesses, but if you're buying an existing business, a lot of times sellers, if they can see that, that you may have success with their business, they may be willing to do some of the financing. So that's something to think about with whoever you're negotiating with. But you really want to check on the quality of those earnings. And that's where like having these professionals, a good attorney and a good accountant is really key, because in the beginning, it's really just like they show you paper, but you'll want to make sure that you can look into tax returns, do some kind of audits to just make sure that what they're representing is accurate, and that also that the cash flow of it is kind of in the what they call EBITDA, like earnings before income taxes, depreciation, amortization, really is justifying the price that you'll be paying. A lot of times businesses are bought and sold on like a multiple of that amount. So it's really important to do what's called like your due diligence, really looking into what's behind like that facade of that number, like what is justifying that number, that because there's obviously risk in buying a business, but a lot of times there can be less risk buying an established business that's already proven some of these things out in the market than starting your own.
Thank you. And thank you, Dr. Wise, for additional resources as well. I appreciate this. One of the great things about being an entrepreneur in this town is there's a lot of us and there's a lot of knowledge, and I think it's generously shared. So just really appreciate that. So just as a recap of what we're doing here together. So we are done on we've completed the first. We're going to have a few minutes for questions. We have the Kiva crowdfunding. We have investment 101, and then crowdfunding specifically with WeFunder. We hope by the end, you're going to walk away with new knowledge, new terms, ready to deploy for your business. And as you can see, we're here. We'll be doing some coaching. And we have a few minutes. We wanted to really be respectful of time because we know if it's one thing business owners don't have a lot of, it's time. So thank you again for everyone. We're going to stay on for questions so we can drop them in the chat or we can come off the screen. Again, thank you to our partners, DSLBD, the Women's Business Center, National League of Cities, WeFunder. We're just really grateful to be with our neighbors here. So this means a lot to us. And was there any other questions we can answer? We are here. We can come off the screen even. And you can either pop them in the chat and we can address them there. We'll also take the feedback as well.
Yes, please keep popping them in the chat. And if you're on the phone, I apologize if for any phone user that didn't check that earlier on, feel free to unmute yourself to ask your questions. I know you can't type it in the chat. But this is a great webinar. I really appreciate how much you cover, but also in an approachable way. I know people attending are at different stages of their business, and some are maybe now they understand more focused on their revenue versus their capital. But this, as well as the next 3 webinars, I encourage you to still participate, even if you're in the early stage, because again, as I pointed out earlier, the tools of using investment and crowdfunded investment together is not really tapped by a lot of businesses, and particularly it seems to be inaccessible for BIPOC and women founders. So we want to at least make you aware of the options and through the training through 20 Degrees and the Marigold Effect in DSLBD, get a better idea of a feel of when to tap which tool. And maybe you're ready now in the next couple of weeks to start tapping the crowdfunded investment with WeFunder, and maybe you're not. We want you to feel comfortable with the options and to know where to get more information when you are ready to move forward. I'm looking one more time to see if there are any more questions in the chat before we wrap. Do you see any, Paola? Oh, great.
So my SBA mentor is very concerned on the impact of another pandemic-like situation on my future business. What are your thoughts?
Yeah,
And SBA, Small Business Administration.
Yeah,
right?
thank you, Paula, for that. Yeah, I mean, I think that's every business, should be thinking about not only another, crisis, but, recession and all that. Like, I think we all have endured something quite big together, but, like business, there's always economic downturns that could be there. So it's always good. That's why we talk about diversification of revenue, thinking about expanding your runway, just as like people often have like their personal emergency finance fund. I always think about with my business, like a little bit of that same thing as a cushion. I think investors can smell desperation, so you wouldn't necessarily get the best terms anyways. So thinking about like 20 Degrees talks about financial resiliency all the time. So it's really good that your mentor is raising that, because I think that when we prepare for the harshest times, we really leave a lot of margin for really much more success.
I will say we'll wrap with one of the quotes that we actually think about a lot at 20 Degrees is be a painkiller, not a vitamin. You never want to be a nice to have for people. You want to be something that they can't live without. And yeah, and we're going to talk about that best way to fundraise. All that happens. That's coming in future webinars. So yes, because I like the 7 and 8 figure projects. I'm here for it. But yes, they're probably not from people you have dinner with on a regular basis. And if you were, you probably wouldn't be at this webinar. So yes, we will get to all of that in a little bit. But we know that you are, we know that you're working on problems and on products and services that we all need. And we're excited to be alongside you and how you think about finding the money to make it possible. So thank you all so much for your time, and always fun to be with Pooja and Paola and Camille on conversations like this. And yay for DC Startup Week. Boy, is it a great lineup of.
Yes, I forgot to put that in the chat, but just Google DC Startup Week and you'll see a whole series, and they're all free. Some are in person, some are virtual or even live, but take advantage of that. And our next webinar is again next Monday, same time, same bat channel, actually different link. I'll send that to everyone who registers. But crowdfunding 101 at the very end at 4 o'clock, we'll do a mini Kiva crowdfunding, which is the 0% loan crowdfunding product that DSLBD helps manage. So that will be next Monday at 3 o'clock. We'll hope you'll join us. And again, thanks again to 20 Degrees, Sarah and Paula, and the Marigold Effect with Pooja. You really got through some great content in a very accessible way. And we hope you'll join us for the rest of the Crowd Building for Capital series. Take care, everybody.
Thank you,
Thanks, Al.
everyone.